This is the Nedgroup Investments podcast, where we explore a variety of views and insights that investors care about. Hello, I'm Demisha Greater from Nedgroup Investments Multi-Management. This installment of your market and economic wrap is titled South Africa Looks to Strengthen Strategic Ties, BRIC by BRIC. The 15th annual BRIC Summit kicks off in Johannesburg from today, where politicians and captains of industry from South Africa, China, Brazil, India, and Russia will be in attendance. The summit build-up has been dominated by speculation on the possible expansion of the BRICS grouping and the introduction of a common BRICS currency. This takes place against a backdrop of intensifying geopolitical tensions between Western countries, dominated by the US, and China-Russia. Given these strong trade and investment linkages with the West, but also crucial trade relations with China, the South African government has struggled to navigate these tensions and to communicate a coherent position. With this in mind, our Western partners are likely to keenly observe South Africa's stance in some of the key debates that are due to take place during the summit. China and Russia seem to be in favor of expanding the BRICS membership to form a bigger counter against the influence of Western-dominated multilateral institutions such as the IMF and the World Bank, as well as the dominance of the US dollar in international commerce and finance. In contrast, Brazil and India, who see the value of maintaining good relations with the US, have been lukewarm about the expansion. In a policy speech on Sunday, President Cyril Ramaphosa indicated that South Africa supported the expansion of BRICS. In addition, our president reiterated our non-aligned stance, where instead of directly aligning with a particular global power bloc, South Africa seeks strategic partnerships with countries across the globe. Aside from the summit, there will be plenty of news to digest this week. On the domestic data front, the July consumer inflation or CPI figures will be in focus on Wednesday. The latest print could be important to ease some of the jitters around the near-term South Africa interest rate path. This is amid renewed pressure on the rand of late. Last week, the South African Reserve Bank Deputy Governor warned that the central bank not only remain concerned about upside inflation risks, but may resume with policy interest rate hikes if the risks materialize. The Nedbank Economics Desk forecasts headline consumer inflation to have continued to moderate, falling to 5.1% in July from 5.4% in June. The slowdown mainly reflects the impact of the high base established last year when Russia's attack on Ukraine aggravated supply chain disruptions and resulted in a surge in commodity prices. With that said, the main driver of the monthly rise within the housing and utilities basket will be electricity tariffs. Earlier in the year, the National Energy Regulator of South Africa, or NERSA, authorized Eskom to increase its tariffs by an average of 18.6%. As a result, municipalities have raised electricity tariffs by more than 18%, effective from July. Last week saw global equities broadly lower for the third week because of worries around the Chinese economy and further interest rate hikes in the large industrialized economies, and this dampened investor sentiment. In the US, the Nasdaq led the declines for the third successive week, while in Europe, the FTSE 100 3.5% loss eroded its year-to-date gains. With that said, global equity markets were mixed in Monday's trading session. In Asian trade, China's stimulus action underwhelmed market participants when China's central bank cut its one-year loan prime rate by less than expected and left its five-year rate unchanged. Meanwhile, European markets were broadly higher. Emerging market jitters kept the rand under pressure last week, with mounting pressures and worries around the Chinese economy, lower precious metal prices, and the focus on this week's Jackson Hole Symposium saw the local currency move lower. The rand touched 19.30 Rand against the US dollar in intraday trading last week Wednesday, before pulling back to end the week slightly softer. Money market rates were little changed while bond yields rose as the weaker exchange rate stoked inflation fears. While the JSE All-Share Index managed to finish Monday's trading session in the green, last week we saw the local bourse under pressure as basic materials fell to its lowest level since September 2021. We have come to the end of our note. Until next time, take care from the Multi-Management team.
Nedgroup Collective Investments is an authorized collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Nedgroup Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit nedgroupinvestments.co.za. Nedgroup Investments, see money differently.